We have a very distinguished panel today. Tim Reinhold, who's an engineer with IBHS, Kyle Butler, who's an engineer with AIR, and Steve Weinstein, who's the general counsel for RenaissanceRe. Following our presentation, we will have a short presentation by some very bright master's students in engineering from the University of Florida, and they have an award-winning presentation that they want to share with you regarding mitigation. So we're looking forward to that. As Mark indicated, I'm a professor emeritus. I was pretty excited about the title till the dean told me it was a lot cheaper to give me that title than it was to buy me a gold watch, so I'm not as excited about it as I was. At the Storm Center, we've always looked at mitigation as kind of a three-legged stool. We've looked at it as, number one, you've got to have incentives. Number two, you've got to have the right building science. And number three, you got to figure out a way to pay for it. And these distinguished panelists here will cover those various topic areas. One problem we have in Florida that has been around for a long time, and in my opinion, we need to address it and we need to fix it, and that is that the way that the credits were implemented in the state of Florida basically have two unintended consequences. They serve as a disincentive for mitigation, and they serve as a disincentive for depopulating the residual market, that is, citizens. And just a real brief example to kind of explain what I'm talking about, I'll just tell you how it affects me personally in my house. I have a house in North Tallahassee. It's got a hip roof and it's got hurricane clips. When ARA did their relativity study, they came up with a base house. My house, because I have a hip roof and hurricane clips, has a relativity of 0.91. That means if I get a 9% break on my wind premium because I have a hip roof and clips, that's fair. Those folks whose houses are constructed worse than the base, they ought to pay more and thus be given an incentive to retrofit and strengthen their houses. Those folks whose houses are built better than the base ought to be given more of a credit for that. Logical, makes sense, great idea. The problem is, when the relativities were converted to credits, the decision was made that we don't want anybody's rate to go up. Therefore, the base was recentered to the worst risk, which basically was 2.37 times greater than the base. So when you take the base from 1 and you move it up to the house that's 2.37 times worse, everybody else's credits get magnified. So my 9% relativity, which I think is fair, goes to a 62% credit. Then I get a letter from My Safe Florida Homes saying if you spend $30,000 by putting on a secondary water barrier and opening protection and so on, you can increase that to 70%. Well, I'm getting 62% for doing nothing, and when it came to doing that or getting new countertops, I can tell you what my wife voted for, and it wasn't going to be a secondary water barrier. So that's the problem that we have, and that's just it in a nutshell. And I think we have this recurring problem of having mispricing and thus a lot of risks that are underpriced and thus in the residual market. And until we get that pricing corrected, we're going to continue to be plagued, I think, with a large residual market. So having said that, leg number 2 on the stool regards building science. And Tim's a great engineer, IBHS. I know many of you are familiar with the great work they do. And I think just, maybe some video and some actual demonstration of the great work they do will just give you an idea of the scale of the great research they're doing. So Tim, I'll turn it over to you.
Thank you, Pat. And just for those of you who may not know IBHS, we are a organization created by the insurance industry and totally funded by the insurance industry through dues. And our objective is really mitigation in terms of reducing the losses and making communities more resilient. And we go, there we go. And what I'm going to talk about briefly, because we don't have a lot of time this afternoon, is a fortified program that we have been working on for some time that has really gotten a shot in the arm this last year in several different ways. We've spent a lot of money getting the infrastructure, the IT infrastructure behind it so that we can scale it up and be able to handle a larger volume of properties of people who do want to have their homes evaluated for the risks and then take the steps to reduce the losses. It's a tiered program really designed for existing homes, although when a home is built, it becomes an existing home. And so we have actually had a number of builders beginning to look at the program and adopting that in their new construction. The first level is really getting the roof right, trying to make sure that you've got your roof sheathing attached well, that you're not going to lose panels of it and open up holes that water will pour in, that you're going to seal that deck. We tend to talk about that rather than the secondary water barrier. And part of that is some of the politics that came out. When the My Safe Florida Home mitigation program was put in place, part of it was aimed at upgrading the roof, renailing the deck, putting tape and so forth over the seams and trying to provide this. It was called a secondary water barrier. At some point, the legislature decided that rather than pouring mitigation funds into re-roofing, that they would change and have the building commission mandate those changes when you do re-roof. The problem with the term secondary water barrier is the roofers pointed out that back in, I think in 1940-some, the National Roofing Contractors Association called felt paper a secondary water barrier. So they already have it. So I'll show you a video that shows some of the benefits of doing a bit more than that here in a second. The second level would be then to begin to close up the openings and protect and keep the wind pressure from building up inside the house that can overload the connections. And at the top level, if you're willing to go in and you're doing a major remodel or something, you could begin to tie the building together. So if we go to the next slide. Oh, I guess I got it. And if you can start the video here. I think he's got to shift to a different computer to show the video, unfortunately. There we go. All right, so we started out with this duplex. Half of it has tape over the seams between the roof decking and half of it doesn't. We blew the roof cover off to expose the deck so that we could go forward with some of the other testing. So you can begin to see some of the tape seams showing up on the left-hand side of the property, and then we're exposing the other part of the roof by blowing the shingles off of that as well. And here we're starting to put rain onto the building, blowing it at about 50 miles an hour with about 8 inches per hour of water coming in. And you can see the water streaming around the building. The major leak in that particular structure, the way it was set up, was coming through the roof deck, pouring in the seams between the plywood sheathing. You can see it leaking off the lights. At some point during the process, we blew the circuit breaker and lost lights inside, as you normally would in a home if your power was still available to you. And about a half hour after the test was completed, we ran for about an hour with the storm. Then the ceilings began collapsing, and this is what we ended up with on the side where there was no tape. So significant damage, materials would be replaced completely, and the house would have to be gutted, dried out, and redone. On the other side, in a second, you'll see there's a little bit of white on the floor. That was where we were going up and down the stairs to check and see if there's any water coming through. All right. And then, looking at the numbers, we had some adjusters come through and look at the difference in the damage and the losses, and it's a 3-to-1 ratio. So for about $500 worth of tape and putting it on to seal up the roof deck, we had a 3-to-1 ratio difference in terms of the losses. And I think that's what I had to throw up at this point.
Okay, thanks, Tim. One thing that we wanted to talk about too, and we asked Kyle to come talk about, the accurate data are very, very important. For example, one project we had going at the Storm Center is we are collecting about 3 pages of secondary characteristics of the state university buildings. And when we collect this information and we run it through the models, it's showing about a 25% reduction in the PMLs, which then the Division of Risk Management is able to use when they're negotiating to buy the reinsurance for the state, because that gives the underwriters some confidence that the data are accurate. And it also shows that a lot of these structures in the state of Florida are built a lot better than perhaps the defaults would indicate. So with that in mind and how important accurate data are, Kyle Butler, an engineer from AIR, is going to talk about some of that and how it involves modeling. So Kyle, thanks.
I don't unfortunately have nice flashy videos like Tim, but I can talk a little bit about how we look at things from a modeler's perspective in regards to mitigation. Let's see if we can get this to go here. Here we go. Really and truly, when you're using a model in mitigation, we're really talking about using a what-if scenario. We're turning knobs and dials and looking at what adding this feature, subtracting this feature, putting this in, taking this out can really do to my losses. So that's where we want to be as a modeler. And then the question becomes, even if we're turning all these knobs and dials, are we making sure that we have the right characteristics for our building? Are we turning the right knob and pushing the right dial? Along with that, and with each new storm, hopefully, the modelers are going out. They're looking at the impact of these secondary characteristics, these add-ons, the features of a house, and attempting to justify what we get from the science and validate the behavior of the model and validate the real-world trends. And then identify even new trends that might pop up. Maybe somebody's got a new toy they've put on their house for mitigation. What are those new trends and how are they really showing up in the losses? So what are we putting into the model in terms of data? So we have what we get from industry. Obviously, we put in information from IBHS and other sources that are really driven by what the industry sort of needs, what the market wants. At the same time, we look at academic and university settings where obviously their projects are driven by what funding they can achieve, but they can also do a myriad of different tests. Maybe it's a benchtop computational study, maybe it's a physical wind tunnel model. And then at the end of the day, they publish this, it's peer reviewed, we look at it and we determine, hey, maybe this is worth considering, maybe this feature needs more research, and that kind of thing. We're really wanting to spill into the model, but at the same time understanding what's already out there in the market. And even internally within the company, maybe we can do some small studies as needs arise using some computational methods. We don't always have wind tunnels at our disposal, but we can make use of what's out there to really shore up what we have in terms of information from claims. There are obviously new techniques that are flying out there looking at how to identify some of these secondary characteristics without having a tremendous number of boots on the ground, and that could include satellite and aerial images. And then going through the process of image processing to really gather what sort of characteristics we can get from those photos without having a lot of that maybe buried in the exposure data or the claims data. But at the end of the day, the claims have what is really the in situ behavior. That data set is valuable, and it has buried within it what's actually happening on the ground, how that piece of mitigation is performing as that storm is passing. And using that little bit of information on top of everything else helps us to understand sort of any of the differences we might see between what we get in a lab and what we might actually have happen in the field. So the way this works, at least from our model perspective, is that we have to have two approaches, but yet one approach at the same time. And two of those, the two approaches are, one, if we know exactly about every characteristic of the building, we have very detailed data, we can model that building exactly as we want. But we do know there's lots of data out there, and we have data that maybe isn't complete. It doesn't have quite everything. So we try to shore that up with a holistic approach, using building codes and any other information we can gather, make assumptions, maybe based on what we know of these individual buildings, and trying to complete the circle of taking claims, research, and any other piece of information we can get from IBHS or anyone else to complete the circle of model validation, to have the complete vulnerability picture to run these what-if scenarios. So going forward, what are we as modelers looking for to put in, for validation or anything like that? Obviously, the building codes are always changing. They're always being updated. Things happen. We look at those to understand what are the impacts on vulnerability. Are states adopting those? Are they pulling those in? How are those going to affect these what-if conditions? And then continuing our existing data collection. But there's also, things that are happening on top of this. Obviously, we have, when you mitigate, you retrofit. What is it about mitigation that's unique? So what might we need to have beyond simply, I have this feature now? Well, maybe I need to also know what year the building was retrofitted. Maybe my house was built in 1900. maybe it makes a difference if I retrofit it in 1970 versus retrofit it in 1990. So there's going to be more data that's going to be needed on top of simply just the mitigation feature that's being added or changed. And then there's new technologies. There's always something that's going to appear on the market that's going to wow everyone that I need this on my house. It's going to save me from every storm. And while wide acceptance of it may prompt some consideration on our part, there will always be a bit of a lag between what can go into the model to run these scenarios, because you have to have some sort of real-world test of that product. And if we're not having storms between a large gap in storm occurrence and when that feature is used, it will create a bit of a lag in what the models can do. But at the end of the day, we're always trying to improve the model with burgeoning science, and hopefully we're getting there, and that's our aim.
Okay. Thanks, Kyle. And RenaissanceRe and Steve in particular have been very, very strong supporters of mitigation, and have had provided tremendous amount of support in the whole arena of mitigation and for this conference. So Steve, look forward to your comments on mitigation.
Thank you, Pat. Well, Pat, if you don't mind, as I appreciate the clicker, if I can veer off script just slightly, you mentioned your gold watch. I'm sorry about that. There is a Mickey watch available for you. Lets you into your room and let you buy chocolate-covered pretzels. But if you'll let me pause for a moment and thank you, Pat, for all you've done over the years. I think you've gone above and beyond the call of duty, given faithfully and endlessly of your time and your wisdom and your expertise, the public service, the teaching. You've taught me so much over the years. So you didn't get the gold watch because you're not allowed to go anywhere. The work that you've done to make people safe, to teach us all, is going to continue. And I want to thank you for all that you've done.
Thank you.
All righty. So I've been introduced, and one of my jobs is the General Counsel of RenaissanceRe and from the legal department. Okay. And from the marketing side, I sometimes tell folks, reinsurance is the most interesting business most of you have never heard of. But we just celebrated our 20th year. More on that in a minute. And our DNA was here in Florida. It's always a thrill to be back in Florida. But the Hurricane Andrew that Jack was talking about, what it meant for the markets, were the impetus for the formation of RenaissanceRe in many respects and much of our competition. 20 years on, we are the largest provider of Florida reinsurance catastrophe-exposed coverage in the world. With 100% client retention rate, and I see many of you in the room. So when I look at the stats that matter to us, that our clients stay with us year after year as we try to support you, means a lot to us. We bring a lot of capital to bear, but we try to bring a lot of human capital and relationship capital. Down in the bottom right there, those are the Oscars of reinsurance land, or at least the Golden Globes. And I think for every year the category has been relevant, RenaissanceRe has run property cat reinsurer, best overall property cat reinsurer. We're very proud of that because these are things that our clients and stakeholders and brokers weigh in on. But it's an integrated system across the board as we think about how can we help our clients solve the problems we face, helping them solve the problems that their communities face. And the problem that we face is this. The risks of natural disasters are increasing. This is the context. This is kind of a blurb of our SEC annual report on Form 10-K, what I do with the other part of my life. We are required to disclose to investors our material risks. Actually, there's not very much about us that you can't find out about on the SEC's website. And actually, it's true of most of the reinsurance market. Most of us are public, listed on the New York Stock Exchange, registered with the Securities and Exchange Commission. And we describe, as we're required to, that a big risk is the rising risk of natural disasters. And the way forward, as the last panel said, involves mitigation. I think this is an audience that knows this. We've been committed to it over the years. We've learned a lot from Pat and from all of you. One thing that we've learned is that we've got to communicate better. Reinsurers are not the world's greatest communicators. I sometimes say I wouldn't know a consumer shit me over the head. But through our adventure at Walt Disney World over the years, which you will all see tonight, I hope, please don't miss this. We've reached, I don't see anyone from Walt Disney here to tell me not to say this, 4 million visitors over the period of time since storm struck us rose. You will not see a reinsurance policy fly through our simulated hurricane, hitch on the head. What we hope is happening is that some of those 4 million visitors are learning that mitigation is important, it can be cost effective, they can go home and do something practical to make their family safer. We've contributed on the science side with the RenaissanceRe Wall of Wind at FIU that Kyle mentioned, and with our leadership forums, to which you're all invited. If you haven't been, please come to the next one. We try to post all the content on the website for the forums, mitigationleadership.com. We don't charge and we don't pay, but they're open for thought leaders in this community more broadly to bring together the science, the communications, the consumer outreach, finance and insurance, so that we can address these problems. They're too big to solve out of any one discipline. We'll need to do it as a team. We'll need to do it holistically, and adaptation and mitigation are part of it. One challenge that we do face is this. With some of the dynamics that Pat mentioned, over time we have distorted the reality by distorting the price signal and the risk-based insurance rate signal. The price signal provides a lot of information. I see Chairman Brown up front, and I'm not going to steal his thunder, but you tell people a lot when you tell them what something costs, and if you distort that, you're lying to them. We've put people in harm's way, and we've paid them to do it. Yeah. Now, the financing issues around this are important. There's some important equity issues. But as we've said at the forums, and our forum participants have come up with the forum principles, the #1 public policy issue here, despite the importance of the financing and so on, is reducing the risk of loss to human life. We're putting families, children, folks in dangerous places and telling them it's safer than it really is. Now, Pat asked me to summarize some current federal and state proposals happening in the mitigation world. One area where Florida's really been a great leader is in the building code space. Florida's got a terrific building code, state-of-the-art, fueled by folks like IBHS and folks like Pat's shop. It's terrific. Love to see some enhancements around enforcement and consistency and so on, but it's really a terrific building code. Not all states have followed your lead yet. And to make that better, an effort that's really been led by chamber members, State Farm, and other primary carriers to provide some carrots, some sticks to try to get the other states to follow Florida's lead and have scientifically sound and reasonably enforced building codes is something that's happening in Washington. We're cheering that on. Here's one from also on the federal level. This is last year's White House budget proposal. I don't know where $50 billion are actually going to come from, but it's kind of good to see this in the conversation. This is an idea to have a national infrastructure bank focused on disaster safety. And I don't see this check being written anytime soon, but it's good to see these ideas and part of the national conversation. The last panel touched upon this, the Bigger Waters Fund, controversial, lots going on there, but does have some positive reports on mitigation. I think helpfully it found that including building codes as part of the INFIT more broadly will help save lives, will help reduce losses. And 2 other bills in Washington provide some money on a tax credit basis. It's a tough environment to find this on a pay-go basis, but to give people some tools to make their own investments in hurricane safety. One of them is from Florida's own Gus Bilrakis. Those are good bills that we think deserve more support and more attention. And another bill that's really terrific, a great man with a very good idea. We like this one a lot. That is your own Representative Dennis Ross, and he has a terrific proposal, we think, for disaster savings accounts. We just love this. It is a market-based approach to give people, to give businesses the tools to invest in their own safety. If you don't have much information about it, please grab me, or I think Dennis Ross has also got a lot of information about it. Terrific idea. I really want to applaud Representative Ross for championing this. And I think the more that we can pull together and put our arms on the sled with him, the better. Great, great idea, and really proud and happy to see it. We also urge folks to explore and continue to evaluate the benefits of green infrastructure. As we build up at sea coasts, what will make this safer? There has been some science, some studies that suggest that natural barriers save money, provide value. I guess I would call this science preliminary. I think more work needs to be done. Some of this is pretty encouraging, and you see some big numbers around in some of these studies. I think more work needs to be done here, but if something has the prospect of saving the country $23 billion a year, it's worth double-clicking on. But whether it's at the federal level or the state level, I think a framework for this group is if we're going to do things in the space, if we're going to spend some money in some of these others for other public policy purposes that are valid, noble, useful, let's also think about maximizing the return on investment when we do it. One component of that is, are we have a chance of making people safer from the inevitable next storm? Let's include that in the calculation as we think about other land use proposals. In that line, property assessed clean energy is something that gets a lot of attention in the cold energy states. Right, so there's a business problem here. How do you get consumers, as Pat has said, to take action now? If they make their homes more secure, seal the envelope so that they leak less energy, they don't get the payoff of that this year. If you can't make your wife get better countertops this year, maybe the The person with a checkbook wants to see a return within 1 calendar year. The PACE approach, by getting the value of the investment into the property, spreading it out over the years, is designed to encourage these investments. It's not of terrific interest to Florida, not a cold weather state. What we urge people to think about is doing it with mitigation. I think as Tim would say, the engineering is about the same. You're going to get people to go in your house and seal the envelope. Do both. Go for the twofer. We like these ideas. They're purely voluntary. Florida's got the legislation in place to do PACE. We'd love to see it encompass mitigation, which is Florida's issue. The holdups on this are not, does it work, will it be useful, but some technical stuff around liens and Freddie and Fannie, the GSEs that do mortgages. But those are man-made problems which can be fixed. And as the cold weather states fight to get it fixed, I'd urge Floridians, keep the mitigation ideas in the forefront so when it does happen and this does move forward, Florida's mitigation needs are part of that solution set. And one thing then, we also think a little bit about, we've got some scientists lurking in the corner at various places here. I think many of us are familiar with the business case study that is Silicon Valley, perhaps the world's greatest cluster of non-petrochemical wealth in the world today. What did Silicon Valley have back when it was a bunch of wine fields? Well, it began with it had universities, right? They had a cluster of smart people, human capital, and reasonable proximity. They had a market because they had early adapters for the stuff that the academics were starting to think about. And from there, a few thousand fortunes were made. And the world was changed, and I get all sorts of tweets and all sorts of stuff, right? But what does Florida look like to me? It looks like it has the makings, the bones, the skeleton to be the Silicon Valley of global disaster preparation, right? You have many of the world's leading academic institutions with bright people like Pat and academics that he's trained who are studying this space. You've got institutes like IBHS, like the Federal Alliance for Safe Homes, My Safe Florida Homes, the people and the entities that were on the prior panel. Now you're spread out a little bit. It's bigger than Silicon Valley, but you really have the infrastructure here to tackle one of the world's big megatrends, the rising risk of natural disasters. This is one of the big market opportunities of the future. Florida has the bones to move forward, and I'd urge you to think hard about it. The human capital, the space, the infrastructure that's left over from the Space Coast, it's something that Florida can do, and I'd challenge you to do that.